Download the Domain app and shortlist with whoever you're in the property market with. So you don't have to worry about whether you like the same properties or if you even like each other. Don't go there. Domain. Know what we know.
Every Monday on the John Stanley Show, we're joined for a property wrap, and now we're back in that groove as we get settled into 2026. And I'm joined by Peter O'Malley from Harris Partners Real Estate. G'day, Peter.
Good evening, Bill.
Last time we spoke, you were in Japan, of course, but now, like not everybody else, but a lot of people, you're back in business.
That's right, back at the desk and ready for a big year ahead in property, that's for sure.
Well, interestingly, there's been quite a few articles about that, and the forecast range for modest growth in houses and apartments.
That's right, Bill. I've been slightly surprised at how positive the forecasters have been this year. Most are expecting growth between sort of 4 and 8%. And the reason that's surprising is that it's also fairly much a given that the RBA will probably be forced to increase interest rates at some stage in the first half of the year. So that's a very, very bullish assessment by our forecasters there, that's for sure.
And there was a little bit of a drop-off in the final month of 2025 too, in Sydney anyway.
There was. Cotality reported that apartments in Sydney actually rose 0.3% in December, but housing dropped by the same amount, by 0.3%, giving an overall reading for dwellings of minus 0.1%. But yes, I think most real estate agents on the ground, Bill, would confirm that the market backed off late last year, and that's now popped up in Cotality's numbers for 2026.
And there are a lot of variables. I'm talking now about the economy, which of course will affect confidence in the real estate market. Overall, what's 2026 looking like?
Look, I think the big one is immigration. What does the government do on immigration? They've been saying for years, we're hearing the message, we're heeding the message, we're going to back off. And then we get the numbers through for the respective year, and they show that another 350, 400,000, 450,000 net overseas migrants entered the country. The majority of those net overseas migrants end up in Sydney and Melbourne, and that is why you've got out-of-control rental markets, because there simply is not enough housing in each city to house the number of people the government are channeling down the funnel. Now, I've got a view that if the government do allow those sorts of numbers to enter the country again in 2026, the rental market will explode and will probably jump by about 10% in 2026. Will have a profound impact on tenants. And when it comes to the CPI basket, Bill, rents are included in the CPI basket that go to form the inflation rate, whereas mortgages are not. So I think you'll see upward pressure on inflation through the rental market if the government do allow too many people to enter the country without sufficient housing.
Well, the problem here too is that landlords will pass any rising costs that they have onto tenants if they don't get out of the market altogether. So that's another pressure too that needs to be considered.
It really is. The New South Wales state government have introduced a stealth increase on land tax, and that is going to bite landlords in 2026 in New South Wales. And that's a stealth increase to the land tax rate that a lot of landlords are not seeing coming, but they'll certainly know about it when their notices arrive in February. But as you say, there's been a steady bleed of existing landlords exiting the market, and everyone wants to beat up on investors, but we haven't been selling properties to investors en masse for probably 10 years, Bill, because the yields are not there to entice investors into the market.
And are they dropping out of property altogether?
They are, or they have chased property interstate. So during COVID, I remember looking at the Brisbane housing market, and the median house price in Brisbane in 2021 was $555,000. Tonight, the median house price in Brisbane, Bill, a mere 4 or 5 years later, is $1,131,000. And a lot of that growth has been investors leaving the Sydney and Melbourne markets and reinvesting in Brisbane, which was showing tremendous value, being at a median price of $555 and obviously becoming the Olympic city in the same breath.
And I guess for some of those mum and dad investors who might own one property in their lifetime, commercial is also very tricky because I think retail, it's fair to say, is still under threat from digital shopping, is it not? And warehouses, well, that's another argument altogether.
Commercial real estate is really for the sophisticated investor at the moment. That's right. It's very easy to end up with an empty retail shop. And I see it all the time where a landlord will put basically a zombie business at an inflated rent into their commercial property. The naive purchaser will come along and pay for what seems like a terrific yield on the commercial property, and then lo and behold, at the first opportunity, the tenant folds and the business is gone, and the landlord can't find a new tenant anywhere near the price that they originally purchased the property at. So the rents drop, and therefore the value of the property drops at the same time. So one really needs to know what they're doing if they're going into the commercial property sector. The other sector that's under tremendous pressure when you're talking commercial is offices. Work from home has decimated office values. So, you really need to know what you're doing if you're heading into that space as an investor.
Now, you touched on interest rates, mate, but what are you hearing? What's been the pattern, if you could say there's a pattern?
Look, the RBA have shown a propensity to only react to quarterly inflation numbers, not monthly inflation numbers. The next quarterly inflation number is due on Wednesday, January 28, and that will determine what the RBA do next. It looks to be running in the high threes, the inflation rate, and if that persists in the January reading, I think the RBA have little choice but to look towards a rate hike from there.
Yeah, that's going to certainly shake things up. Now, you and I had an interesting and fun conversation about some of the luxury prestige properties that were available for rent during the holiday period, particularly in Sydney, and the numbers were just astronomical. But prestige property generally, we're not now talking about renting, but the sale market.
Yeah, look, it's been a stellar performer in Sydney since the boom of 2021. Other segments of the market cooled down as interest rates went up through 2022 and 2023, but not so the prestige property market. A lot of those transactions, if you can believe it, Bill, are done in cash, and the interest rate setting of the day doesn't impact on the buyers or the sellers.
Yeah, well, you can only speculate on where the cash comes from, can't you? But really, regardless of what's in our imaginations, surely the government could have a look at this. If nothing else, it might preserve some property for local buyers, but it might also rake in a bit of extra tax dollars for us because, I don't know, it seems rather strange, doesn't it, that a lot of them would be from offshore?
Oh, very much so. There's an absolute disconnect to how the economy is performing, how the mainstream Australia is, pushing through in these tough times, if you like, this cost of living crisis, and then the prestige end of the market is spending money like it's going out of fashion. Now, is it crypto money? Is it share market gains? Is it accumulated wealth, inherited wealth, offshore funds, money laundering? Take your pick. It's probably a mixture of all of those. What I can tell you in 2026 is real estate agents nationally have extra obligations on them to report suspicious activity in the property market. So the government know that real estate has been used to funnel a lot of dirty money. Developers doing big projects that, break even, but they clean the cash in the process. These are the sorts of things that the government are zeroing in on because real estate, frighteningly, is an easy way to wash cash.
We're talking to Peter O'Malley from Harris Partners Real Estate about it's the weekly property wrap, and it's our first for 2026. So we're having a big picture assessment. Finally, mate, employment. That, again, is going to be a very influential statistic on the property market in 2026.
Look, it really is, Bill. In Australia, we've had a golden run economically, as we know, and Australians think that good employment conditions are a norm and a rite of passage. And that's not quite the case. We have had a golden run, but I can tell you from a lot of people that I've spoken to that AI does represent a threat to employment and jobs in 2026, and a lot of corporates are struggling to lift their top-line revenues. So the easiest way and most likely way that they can increase their profits is by cutting costs, and jobs that can be turned over to AI or outsourced overseas for a lower amount are at real risk in 2026. Now, I'm hoping this is not the case. I think that's a sad way for a society to go. But the great employment conditions that we are used to in Australia, we must just keep an eye on the unemployment rate. It bottomed, I think, at 3.4% in August or September 2022. And it's been gradually edging up to a peak of 4.5% late last year. Now, after it hit 4.5%, the unemployment rate, as we know, dropped back to 4.3%, but the overwhelmingly long-term trend is unemployment is going up, and we wouldn't want to see it accelerate through 5%. I think you'd see that impacting on the property market. If unemployment can stay below 5%, that should not play a role in the way the property market performs this year.
All interesting stuff to think about. We'll see how those trends unfold over the year. And, of course, we'll talk about what's happening next week. Will we have any opens by next week, Peter, or are we still waiting for those?
Oh, yeah, indeed. No, Bill. If you can believe it, we were showing properties on Saturday, and we had many open inspections where 8 to 10 parties arrived and qualified as well. What I'll say about any buyer that's looking or attending an open house in early January, they're not a tyre kicker. They're out to do business, which is why they're there.
Hitting the ground running. Well, we'll talk about that in more detail next week. Peter O'Malley, thank you.
My pleasure. Thank you, Bill.
With Domain, you can know property price estimates trusted by the banks. So you don't have to worry about whether the house is close to your budget or not. Or having to ask for other people's price advice. Like your friend who's always on the money, except when it comes to actual money. Or your dad, who gives you advice, but nothing to do with prices. Or houses. In fact, he just tells you a really bad joke. No property price estimates trusted by the banks. Download the Domain app. Know what we know.